Ever looked at a stock market chart and wondered what all those lines and colors mean? It's like staring at a secret code, isn't it? But don't fret, the mystery is about to unravel. Stock market charts, ladies and gentlemen, are the lifelines of investors. They're like treasure maps, guiding us to make informed decisions about when to buy, when to sell, and when to simply hold on. They are visual representations of stock prices over a certain period, each line, each color, each dip and rise telling a story. Think of them as the EKG of the financial world, giving us a pulse on the health of a company, an industry, even an entire economy. And just like an EKG, the key to deciphering these lines lies in understanding their patterns, their rhythm. So, are you ready to decode the mystery? Understanding these charts is not as complicated as it seems. It's all about knowing what to look for. So, what exactly are we looking at when we see a stock market chart? Well, a stock market chart is a graphical representation of a stock's price movements over a specific period of time. The horizontal or x-axis of the chart represents time. This could range from minutes to years, depending on how detailed you want your analysis to be. The vertical or y-axis, on the other hand, represents the price of the stock at any given point within the time frame. There are three primary types of charts used in stock market analysis: line charts, bar charts, and candlestick charts. Each one presents the data in a unique way. A line chart is the simplest. It plots the closing prices of a stock over a set period and connects these points with a line. This gives you a clear, uncomplicated view of the stock's overall trend. Bar charts, also known as OHLC charts, provide more information. Each bar represents one period of time and shows the open, high, low, and close prices of the stock for that period, hence the name OHLC. The top of the bar indicates the highest price, the bottom the lowest, while the horizontal dashes on either side show the opening and closing prices. Candlestick charts, on the other hand, are a bit more complex. They also show the open, high, low, and close prices, but with a visual twist. The body of the candlestick represents the range between the opening and closing prices, while the wicks or shadows show the highest and lowest prices. If the body is filled or colored, it means the stock closed lower than it opened, indicating a bearish period. If it's empty or a different color, the stock closed higher, indicating a bullish period. And let's not forget about volume. It's represented by the bars at the bottom of the chart. Volume is the number of shares traded during a certain period, and it's crucial in confirming the strength of a price move. Remember, each type of chart provides unique insights, so choose the one that best serves your analysis needs. Before we move on to reading trends, let's dive a bit deeper into the types of charts and the unique insights they provide. Each type of chart is like a different lens through which we can view the stock market. Line charts, for instance, are perfect for beginners due to their simplicity. They give a clear picture of the overall trend, which is crucial in understanding the general direction of a stock's price. Bar charts, or OHLC charts, on the other hand, offer a more detailed view. They provide information about the highest, lowest opening and closing prices within a specific period. This can be particularly useful when you want to analyze price movements within a single trading day. Lastly, we have the candlestick charts. These charts, with their unique visual representation, can help us understand market sentiment. For instance, a filled or colored body suggests a bearish period, indicating selling pressure. On the other hand, an empty or differently colored body signifies a bullish period, pointing towards buying pressure. This can be extremely helpful in understanding the market's mood and making informed decisions. So, whether you're a newbie or a seasoned investor, understanding these charts can significantly enhance your market analysis skills. And before we move on, we want to remind you that if you're finding this video helpful, don't forget to hit the like button and subscribe to our channel. Your support helps us create more educational content. Now let's move on to understanding how to read the trends in these charts. How can we use these charts to predict future market behavior? You might be wondering. Well, it's all about reading the trends. Let's dive into it. Trend lines are like the pulse of the market, giving us a sense of its overall direction. They connect the highs or lows of a stock's price and can indicate whether a stock is trending upwards, downwards, or moving sideways. An upward or bullish trend suggests that the stock's price is generally increasing over time, while a downward or bearish trend implies that the price is decreasing. In a bullish market, investor confidence is high and it's a great time to buy. On the other hand, a bearish market signifies declining prices and can indicate caution. But remember, what goes up must come down, and vice versa. Markets are cyclical, and trends can and do reverse. Now let's talk about support and resistance levels. These are like invisible barriers preventing the price of a stock from moving higher or lower. A support level is a price level where the stock's price tends to stop falling, and buyers are likely to step in. A resistance level, on the other hand, is where the price often stops rising as sellers start to take profits. Support and resistance levels are crucial for investors as they can help identify potential buy and sell points. For example, if a stock's price is approaching a known resistance level, it might be a good time to sell before the price potentially drops. Conversely, if a stock is nearing a support level, it could be an opportune time to buy before the price possibly rebounds. But, as with everything in the stock market, there are no guarantees. Trends can change, and support and resistance levels can be broken. That's why it's essential to use these tools in conjunction with other indicators and to always stay informed. Understanding trends can give you a heads up on potential investment opportunities. So keep your eyes on those charts, and happy trading. Beyond the basics, what else can these charts tell us? Well, they hold the key to a world of technical indicators. These are mathematical calculations based on a stock's price and volume. For instance, moving averages smooth out price data to help traders identify trends, while the Relative Strength Index, or RSI, measures the speed and change of price movements to indicate overbought or oversold conditions. Another popular one is the Moving Average Convergence Divergence, or MACD, which follows trends and indicates potential buy and sell signals. But that's not all. Charts also showcase patterns. Ever heard of head and shoulders or double top and bottom? These are price patterns that signal potential reversals in the market trend. Head and shoulders resemble a baseline with 3 peaks, the middle one being the highest, while double top and bottom depict 2 consecutive peaks or troughs. These indicators and patterns can significantly enhance your market analysis. Now that we've covered the basics, let's put it all together. We've journeyed through the mysterious landscape of stock market charts, uncovered their basic structure, and learned to read the trends. We've delved into indicators and patterns that can offer us clues about future market behavior. By now, you should have a good grasp of how to decipher these charts. Remember that each line, each dot, each color represents a piece of the market's story. These elements come together to form a comprehensive picture, guiding us towards making informed investment decisions. Understanding stock market charts is not just about predicting the future, but about gaining insight into the past and present. It's about connecting the dots, spotting patterns, and making sense of market movements. It's about not just following the herd, but making your own informed decisions. Remember, successful investing isn't just about buying low and selling high, it's about understanding the market, and charts are a big part of that understanding. If you found this video helpful, don't forget to hit the like button and subscribe to our channel. We're dedicated to helping you understand the complexities of the stock market, and we've got a wealth of content to guide you on your journey. Your support helps us create more educational videos like this one, so thank you for watching and learning with us. Remember, the stock market might be a puzzle, but with knowledge and practice, it's a puzzle you can solve. So what are you waiting for? Take the next step, dive deeper into the world of stock market analysis, and become the confident, informed investor you've always wanted to be. Stay tuned for our next video, where we'll delve deeper into more advanced chart reading techniques. Until then, happy investing.